What is going on, snipers? Naeem Al-Obeidi here. I hope all of y'all are enjoying your day today. Let's dive into our daily cryptocurrency update for today. We're going to be talking about why analysts are predicting a bull run for Q2 of 2018 following one of the worst quarters in Bitcoin's history, which was January, February, and March, losing over $100 billion in market cap with a snap of a finger. And then we're going to also look at a project that I'm extremely excited about called Zilliqa, who just launched their testnet today. And as you all know, that brings a lot of intrinsic value to the plate. And it's the first real-world use case of sharding technology on the blockchain, which enhances and fixes a problem of scalability that we've faced with coins like Bitcoin and Ethereum. So we're going to dive into that. First and foremost, let's look at Bitcoin's technical analysis. And there's one specific thing I want to show y'all, and that's the relative strength index, or the RSI. As you all know, anything under 40 is bearish, between 40 and 60 is neutral, anything over 60 is bullish. And you can see how we bounced right on top of that resistance there, not breaching into the neutral zone, staying in the bear zone. So what does that mean? Well, for me, it means that if I'm going to put it in another position to take advantage of another swing, I'm going to wait until this RSI can get back down to 30 or below 30 like we did with Ethereum yesterday. That yielded about 8+% profits depending on when you exited. And if you didn't watch yesterday's video, we talked about laddering your entry and exit point when you're taking profits. Definitely check that out. But looking at Bitcoin's technical analysis, you can see we bounced right off of that 40. And I think the reason we're seeing this bounce is because when we previously went down to these lower lows around 6,800 to 5,900, following this low in February, we saw one of the largest buy volume bars come up in Bitcoin's history. But now we're not seeing that buy volume. None of that strength is there right now like we saw back here. So in my opinion, it's going to be a little bit of a feat for Bitcoin to see these higher levels like 11,000 once again with these lower volume levels. But we're going to talk about why a lot of analysts are expecting a bull run for Q2 even with these lower price levels. In my opinion, if you're going to be swing trading Bitcoin, when you see a green wave like we saw yesterday, take advantage of those times. Take your profits and be sure to play a bear market by swinging it or shorting it, because that's the two ways to really profit off of a market like this. Transitioning into the total market cap, you can see most of the market right now is in red. If we were to move into Satoshi value, it's a little bit different. We're not seeing that much of a brutal market, and I want you all to pay attention to that because understand there's still opportunities when it comes to Satoshi trades, and we're keeping our eyes out for Satoshi and USD trades at this point. But with more USD pairings coming to these exchanges in 2018, I'm also expecting a bull run here coming soon, but not necessarily any time in the next short-term period of time because of the fact that we're at these lower levels. Market sentiment is where it's at, but we're going to transition into this story and talk about why people are expecting this bull run. You can see this article, it says Bitcoin bull run approaching. And you can see Brian Kelly here is an extremely credible individual here on CNBC. And a couple of things he mentions in this article, in my opinion, are extremely important. I highlighted them, so we're not going to go through the whole thing. But you can see here, Q2 is always good for Bitcoin. There will be a significant rally here if seasonality brings tailwinds. And then you go down and you see here all these other reasons. Historically, Bitcoin has performed well in Q2. There's big conferences coming up like Consensus in May. There's typically more positive sentiment in this summer period of Bitcoin. And then you can also see here, it's the end of tax selling season. And he also talks about how FUD, which is fear, uncertainty, and doubt surrounding government regulation of cryptocurrency, is starting to subside, as we've seen with the G20 summit and things of that nature, where you can see how regulations have not necessarily been such a hindrance for the cryptocurrency world. Obviously, there is regulatory issues. However, we can always move past those, and in any emerging industry, you have to expect these hurdles. And especially a market that goes from 30 billion to 100 billion in less than a year, that's an extreme feat for Bitcoin, and we're definitely going to expect hurdles and roadblocks along the way, and regulations are just one of those. So looking at this next Reddit article, some of y'all might be asking why I'm using this, but I thought this was actually interesting. It did get a couple upvotes here, 852, but it talks about Bitcoin's Q2, and it talks about fiat pairings coming to exchanges, adoption is going up, the usefulness of projects like VeChain, Monero, and Stellar, merchant adoption, and things of that nature in Bitcoin's presence is only going to allow Bitcoin to gain more of the attention in the markets so that it can see mass adoption, because we're still in the early adopter phase. Remember, it goes from innovators, early adopters, early majority, late majority, and then the laggards, and we haven't hit that early majority and late majority phase, which is really the peak of any market. So transitioning into a project that I'm extremely excited about here in 2018 is Zilliqa. So the Zilliqa testnet is now live, and this is a project that I'm extremely excited about for 2018. And as you all know, when a testnet goes live, it brings a lot of intrinsic value to a coin or project, especially when it transitions from a testnet to a mainnet like you saw recently with Tron. Now, what's important to watch here with Zilliqa is understanding that this is the first implementation of sharding, and sharding is a way to solve scalability issues. I've highlighted a couple points here in this article for y'all to learn a little bit about Zilliqa and have an understanding of why I am extremely optimistic about this project. So number one, you can see here that it is currently launching its public testnet. Zilliqa itself is the first ever implementation of sharding used in a public permissionless blockchain, opening up the possibility of transaction rates that could match Visa. Understand, one of Ethereum and Bitcoin's biggest issues is transaction speed. And a part of that issue is because of the fact that it has to verify transactions with all of the nodes on its network, which is thousands and thousands of nodes and mining pools that are verifying transactions. It just doesn't have time to compete with transaction speeds of payment processors like Visa, which eventually, if we want to see this mass adoption in cryptocurrency, we need to eventually match, if not exceed, payment speeds of Visa, MasterCard, and payment processors. So looking here, you can see how it says here, it is incredibly challenging to create a high transaction rate blockchain while maintaining the security and decentralizations of the system, but we feel we have made a breakthrough with what we have achieved. There's a maximum of 20 transactions per second currently for Bitcoin and Ethereum, but with Zilliqa, 8,000 transactions per second worldwide is their goal to match Visa. So Zilliqa showed speeds of up to 2,000 transactions per second so far on its testnet. And the reason it's like that is because of its linear scalability. As Zilliqa scales, it's also increasing its transaction speed at the same time because of the sharding technology. If y'all want to know more about it, feel free to read this article. But sharding is pretty much taking data and making it smaller. That's the best way to put it. It's almost like compressing data. So I'm extremely excited about this project. Not only that, it's only at a $297 billion market cap. Nothing near some of these higher market cap coins that are past 1 billion. And then you can see here with its price level over time, it has not necessarily seen any sort of significant spike. Hasn't seen any sort of significant drop as well. So in my opinion, it's still in that zone where it hasn't seen so much speculative value to where it's put into this bubble position and overvalued at its intrinsic true cost. So in my opinion, awesome project that I'm looking forward to. Hopefully this whole market update has helped some of y'all understand that the current phase of the market that we're in, you have to be extremely careful. Keep your allocation sizes small and make sure that you're staying level-headed in a market like this. So with that being said, enjoy this update. Until our next one, Snipers out.